This is my daughter, and even though she's only 18 months old, she's already a shareholder in Apple, Google, Tesla, and over 7,000 other companies around the world. Sounds pretty weird to say that out loud, but that's exactly what happens when you invest in a global index fund. Hi everyone, and welcome back to the channel, and in today's video we're going to be doing our January update on my daughter's junior stocks and shares ISA. It's a simple investment portfolio that I've been slowly building for her since she was born, and it's very much a hands-off long-term investing approach. And don't worry, Lila will be making a couple more appearances throughout this video. For anyone new here, this portfolio is kept deliberately simple. Between me and my partner, we invest just £60 per month within this portfolio. No stock picking, no buying and selling. This simple approach lets time do the heavy lifting. The reason I love this simple approach is because of what it could turn into over the long term. If we continue investing similar amounts to what we are now, then potentially by the time she's 18 she could have £45,000. All from these relatively small but regular contributions. In this update we'll cover the entire portfolio, exactly what we've been investing in and what the gains have looked like for the past month. So let's take a look at that portfolio. Lila, can you bring me my phone? Right, let's see how things are looking. Okay, so jumping onto the Vanguard site, I do have the app, but I don't think it's quite developed enough yet, and I still find the web version a little bit better, which is why you might find that I'm still on a browser here. So, top lines figures there, just over £2,500, which is a bit of a milestone, crossing the £2,500 mark, which we've managed to achieve this January. And you can see here, I only have one investment. So when I was saying about how simple it can be, this is exactly what I meant. So this is the FTSE Global All Cap Index Fund, and it's the accumulation version. And I believe you can only access this fund if you have an account on the Vanguard site. I do have an Invest Engine account and also a Trading 212 account, and I believe this fund isn't available on there. So yeah, I use it on the Vanguard site. I've got my own personal investments, or some of them, on the Vanguard site, so it was quite an easy transition to me, to add my daughter into this site. So yeah, you can see 100% of the weighting is in there. If we go into the performance tab, so overall we've contributed £2,259.10, and we've gained £328.96, and this has really only been over the last, I believe, 17 or 18 months. Because not last year, but the year before, that's when my daughter was born in 2024, in August, and I believe I opened this account in September. I'll double check shortly. And you can see here, our rate of return is 25%. Now, straight off the bat, it does. If this money was invested within a cash ISA or a simple junior savings account, you're not getting anywhere near those gains, and that's kind of one of the reasons I'm investing rather than putting it in a cash savings account. Over the next 18 years of building this pot of money, I've got the time to ride those ups and downs of the market and ultimately benefit from those long-term gains. So really happy with the performance so far. If we go onto this graph here, you can see how we've got that nice steady growth there. If I tick right at the front there, yeah, so 20th of September or around that date is when we open this account with around £500. Now, yeah, that gave it the initial boost. We got a bit of money from when she was born, from friends and family, and that really has kind of started this journey. So if we have a quick look at the last month, give the website a second to load. Okay, so January so far has been a really solid month for this portfolio. So you can see there, we started the month there at the top, beginning balance of just over £2,300. We've then contributed £230, which is a lot. This isn't a normal amount. Like I said earlier in the video, our regular monthly contribution is only £60. However, £60 of that 230 is our regular contribution, but then 170 of that is, a combination of gift money, which my daughter received for Christmas. This was then added in early January. We put it straight into this portfolio. So we can see January's been great for us. We've made over £44 in gains so far for the month, and our overall returns, like I said before, are £328.96, which is really good. If we scroll back, Won't go back too far, but you can see December, we were actually down almost £12. So, it doesn't go up every month. If you're looking to invest, the reality is month to month, the market does do this up and down. And, be willing to accept that, and it's nothing too much to panic about. The market does this month to month. But overall, the bull markets are generally bigger than the bull markets, which means the growth phases are bigger and generally longer than when it's decreasing. And overall, I'd expect to see returns within this portfolio of between 8 to 10% per year. And obviously we're looking for that compounding effect. November, I think we were also down, but just to give you an idea. But then back in October, it was up £95 for the month. So yeah, like I say, as long as you're gaining more than you're losing, then we're on the right tracks, which is great. So if we have a quick look into our investments tab and into the insights tab. So whilst this is a global fund and we are investing in developed markets, emerging markets, small, medium and large cap companies, the good thing about the Vanguard site and many other platforms is that despite being one fund, we can in fact see, whereabouts is that money being invested. So you can see here on this map, we've got around 67% of this fund invested in North America, 11% in Europe, we've got 11% in Asia Pacific, 6% in Japan. Here in the UK, we've only make up around 4% of this portfolio, which is fine. And for anyone new to this fund, it invests in over 7,000 companies, so you're really well diversified. The key reason as to why we do this is that when investing, if you picked a handful of stocks, and you might think, oh, well, I'm not putting all my eggs in one basket by investing in one company. It's still fairly risky, because if one stock decided to, fall off the cliff, that's a lot of your portfolio and a lot of the weighting of your portfolio that's relying on the growth of that company. Whereas if you spread your investments over thousands of companies like this from all over the globe, it doesn't matter if a particular region, sector, or country, a particular country is having, a bit of a bad time, because all the others can kind of balance it out. Now, of course, when the global economy starts suffering, then your portfolio goes down, but I guarantee it won't be going down half as much as it would be if you picked individual stocks. So that's why we go with this really diversified approach, and it also spreads out that risk. Above all else, this is as simple as investing can be. We've got one fund there, and we add in money at the start of every month, whether the market's high or low. It's all about those consistent contributions and looking towards that compounding effect and long-term growth. Top 10 investments in this account: Apple, Microsoft, Nvidia, Amazon, Alphabet, which is Google, Meta or Facebook, depending on your age and what you know it as, and a few others there. You've even got Elon Musk's Tesla there towards the bottom. And obviously all the other companies are then smaller percentages, but these are our sort of main positions within this fund. And then sector allocation, no surprise that technology is at the top there with almost 26% of this overall fund, and then that slowly filters down to other sectors. So yeah, really happy with the performance overall. Going forward, that really the strategy is no different. I'm going to continue investing month after month. Like I say, most months is just that £60 going in, but around birthdays and Christmas, there might be a little bit more being added in. But yeah, I hope this kind of shows that, even though we've only been investing for 18 months, really £60 a month has not been a massive financial hit for me and my partner. We're quite comfortable with £60 a month. I'd like to think most families are okay with around £50 a month or £50-60 a month to add in to a child's investment account. And this portfolio is really about, and also this series is really about showing over the long term. It's not about dumping in loads of money. It's about being consistent, drip feeding that money in and letting time do its thing. At the moment, if this portfolio goes up 10%, that would be around £250. But you've got to think, if it's got £25,000 in and it goes up 10%, that's £2,500. And in so many years, we're probably going to be at that point, and that's when that compounding effect is really going to make masses of differences, to this portfolio. So that's our quick January update on this portfolio. Things are moving in the right direction, and we're still at the really early days as far as building wealth is concerned for my daughter. But in the grand scheme of things, I've got 18 years to build this account for my daughter, so I think we can grow this quite well in that time frame. Now, if you're new here, I do also share my own personal investments, and I recently did a full portfolio update, so if you're interested in that, I'll leave a link to this at the end of the video. If you want to see how this portfolio grows, then I do regular monthly updates on this, so make sure you're subscribed for that. And if you've got any questions about investing for your own children, or anything you've seen in this video, then please do leave this in the comments section. Right, before we go, one last appearance, I think. Could you say bye? Bye! Thanks for watching, and I'll see you in the next one.